Hello traders, the title of the video is Fibonacci Trader explain his pound dollar FS trading strategies. Let's get started. Alright, as you can see, I'm on a weekly chart. Alright, normally I'm on a monthly chart, but today I'm on a weekly chart. I want to draw your attention to the price move from here. Hold on please. Okay, from October 2016 up to April 2018, October 2016 up to April 2018. So this is the price move here. We apply Fibonacci retracement to that price section, and as you can see now, the price is between the zone of 50% and the 61.8% Fibonacci retracement zone. That's what we call the sweet spot zone. So usually a lot of obviously this is a bullish move and then a pullback to the sweet spot zone. But if you look carefully at my chart, the blue line that I have here is the moving average 200. Recently the price did find a resistance on the edge of the moving average 200. Now a pullback into the sweet spot zone, and the common central line here is broken. So what should we say to traders at this junction? So there is a line, there's a key level here, because if you want to trade Forex, if you want to trade like a pro, you want to trade around key levels. Here, if I drop down, I'm going to move up a bit to the monthly chart, and I want to show you very fast. So on the monthly chart, you see now, here we are. Okay, on the monthly chart. Okay, now what I want to show you is on the weekly chart. In fact, if you look here, there was this support here on the weekly chart. You can see here, you find a support before breaking below it. Here in this session, if you pay attention to this channel here, the price was going up, displaying higher lows, higher high. So this level here is a prior high. It's something that I talked about recently at a Day Pro Trader YouTube channel. But this video, I'll post it at a 2-4, okay, a Forex Trader YouTube channel. So this is a prior high. Considering this move up, this is a prior high, this level of 13037. That level is between the 50% and the 61.8% Fibonacci retracement level. So as a day trader, a scalpless, all right, swing trader, one must give priority to bullish signal above 13037. To color that line now into green. I think green is good, dark green. 130.37. Remember that, note it down. You want to look for trading opportunity above that level, bullish trading opportunity above 130.37, and bearish opportunity below that level. Alright? If the price continues to go down below that level, if it reaches 126.55, which is a level we mentioned to trader before, one must give priority to bullish signal above 126 or in the vicinity on or near the level of 126.55, which means if it goes below 130.37, continue to go down. If it comes near the 126.55, you want to start selling it like a mad dog, or so to speak, and look for opportunity to buy above 126.55 and opportunity to sell below 126.55. So same strategy that I'm talking about in a zone of 130.37. The same thing when the price reaches this level of 126.55, we apply the same strategy. Bullish above, bearish below. So what I'm doing now, I'm going to go quickly. See, on the daily chart, what do we see? It looks to me right now like an inverted head and shoulder chart pattern, but it's not completely formed yet. How do I know? For an inverted head and shoulder chart pattern, this is the mistake that a lot of chart pattern traders are making. The neckline, the price must return back above the neckline. If you are buying here and you don't know how to trade the inverted head and shoulder chart pattern, all right, you can make a mistake. So you want to apply a top-down trading method, okay, and take it one step at a time. Those who are buying here will be prepared to take profit at the neckline, roughly in the zone of 132.00. That's what they are heading now, 132.00. All right. So here, Those who were expecting an inverted head and shoulder chart pattern were already in this trend, pushing it to the zone of 13200. So prior to bullish signal, about 13037, and prior to bearish signal below that level. It's going down, it reaches 12655, prior to bullish signal above 12655, and prior to bearish signal below it. That supposed to be an inverted head and shoulder chart pattern can still fail, which means the price start going down. It won't be any more an inverted head and shoulder chart pattern because it's still being formed. So the best scenario for bullish trend is to go back above the neckline and probably to display higher low above it or to retest it nicely. So to know, one can draw a trend line like this. You see trend line connecting the low of that candlestick bar. I'm now on the daily chart and this low. So that's the trend line that you want to watch carefully on the daily chart. You see here this low and this low here. Now it retests the same trend line. So if it goes up, try to pull back, watch the level of 13200 and also that trend line that I'm going to color now into black, or the black belt, Shotokan, Taekwondo black belt. Okay, all right, either 13200. So that's what we do. So trading is all about looking first for trading opportunities, high probability trading setup, well around specific key levels. If you are just picking out trading setup anywhere, anyhow, it's not a good place. The price now at a sweet spot zone, usually people try to buy there. If we see a trading setup in that zone, which is happening now, that trend is broken, that's why people are taking it now. So they are not trading anywhere, anyhow. They are trading around 13037. All right. When you see a trading setup in the void, you see, when we were on the weekly chart, did you see that? They sold it on the edge of that moving average 200. They sold it here. You see, it's bending down, telling that it's declining, powerful too. They sold it there, down, come back, they sold it again, down. But now, as they sold it here, the bearish momentum is diminishing. How do we know? Because it did not form a new lower low in comparison to this one, unless it continued to go down more up to this point. You see, so far it's looking more bullish than bearish. But if one is trading for, it's talking about Fibonacci trader, explain his British pound, US dollar, FX trading strategies. If one is trading British pound, US dollar, one must always take into consideration the economy news. Talking about the British pound, we are talking about the Brexit. The United Kingdom want to exit the Eurozone, all right? So therefore, this is having a negative effect on the pound. Until a deal is signed, all right, we will see the volatility for the British pound. It may continue to go down more. So no deal Brexit will be a negative for the British pound. In my view, I believe there will be a deal, but don't take my word for it. At the end of the day, it's not about European fighting United Kingdom. It's about big corporate trying to find the best deal for this country when they can prosper. So, in my view, there will be a deal at the end, and the pound will go back up again. All right, but we will see until that time. So, the economy news, the Brexit, the discussion going on, all right, in Brussels right now relating to the pound, relating to this country, United Kingdom, will affect the British pound. So everything there that I say, talking about technical trading, all right, is valid, provided that one take also into consideration the news that are moving the price up and down. So if the news is bad, you will have a negative effect on the price. If the news is good, you will have positive effect on the pound. So don't trade the British pound, US dollar in the vol. Now, talking about the US dollar, the Federal Reserve, Mr. Powell, that's his name now, is increasing interest rate in the United States. So that's why the US dollar is appreciating against other currencies. So there is now inflow of capital into United States. They are repatriating, is an English word or French word. All the money that left United, the investment that left United States years ago are returning back to United States. So the people are purchasing the US dollar. So the US dollar is bullish against other currencies. That's why we see a lot of pressure on the British. But the Brexit scenario, once it's settled, the deal is signed, they have up to March 2019 to sign a deal. They may sign it earlier than expected. If a deal is signed, that would be good news for this British pound. But right now, looking at this chart, those who are selling the British pound should be very careful because it has been going down since 2008. Did you know that? It has been going down since 2008 because of the quantitative easing. You see, the pound was almost $2. All right? It crashed down all the way here. So this is not the best time to be a bearish pound trader. It's time to start changing your outlook and taking a bullish outlook in relation to the British pound. But at the end of the day, we are trading the price, and we must keep our eyes. We must keep our eyes on the price. The price is now between the 50% and 61.8% Fibonacci retracement level, or the move from here to here. I also put on my chart the pitchfork tool, the most neglected technical tool. The first point is here, and the second point right there. And the third point right there. We need 3 points. So you can see, as with the pitchfork tool, we will determine the possible path that the price will take. So it's now in this section here. When we divide the upper half, this is the upper half of the pitchfork tool, this is the lower half of the pitchfork tool. When we divide it into two, you can see that the price was at the intersection of the level of 12655 and that median line of the upper half of the pitchfork tool. That is a hot spot trading zone. So you may say, John, what is a hot spot trading zone? Go to www.stochastic-market.com, click on hot spot trading. This is a hot spot trading. Also, that hot spot trading is on or near the sweet spot Fibonacci trading zone between the 50% and the 61.8% Fibonacci retracement level of the move from here to here. So all in all, as I said to you, prior to bullish signal above 13037, prior to bearish signal below it. If you continue to go down, it comes near 12655. We apply the same strategy, bullish above, bearish below. Again, look for trading setup on or near specific key level, especially the prior high. If you want to take bullish signal, as I show you now, this level of 13037 was a prior high for this move up. That's where this is a signature of the bull. If you find a support and we see a bullish trading setup around that zone, we will take it. And if one enter the trade, one should be aware of the next resistance level, which is in the zone of 13534. And also, anytime you talk about a target 13534, there is always a midpoint target, which is the line between somewhere here, between that 13534 and the 13037, midpoint somewhere there. There's a midpoint target. You see, we found the resistance there before. If you start going now, you will acknowledge again that level. 134. So this is about Fibonacci trader explain his pound US dollar FX trading strategy. I hope you will find this video also useful and we put into use to cream the market consistently. Happy trading to you all, and I will speak to you soon. If this video has been useful to you, please let us know by giving us your thumbs up. If you dislike it, mark it down. If you think this is an essential tutorial, feel free to share it with your friend on Google+, on Twitter, on Facebook, and also on Tumblr. So this will conclude our discussion today about Fibonacci trader explain his British pound US dollar FX trading strategy. If you have not yet subscribed to our channel, please subscribe to our channel today. I will be recording more tutorials. And be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, talking about Fibonacci trader explain his British pound US dollar FX trading strategy. Happy trading to you all, and I will speak to you soon. Thank you for watching.